How you doing, traders? Welcome back to Boom and Crash Guru channel, Broadcast GFS channel. So in this video, basically we'll be talking about what to look out for and certain tools or strategy to adopt when analyzing boom market, basically boom and crash market. So specifically regarding this analysis being displayed for us, this is boom 900 analysis, and this is the aftermath of the analysis. Most people have been asking, so what's the trick or what's the knowledge about this analysis, and what's the main reason why I gave out this analysis? And as we can see the aftermath, we see that this analysis was successfully mixed totally, both with the VIPs and with the free member. So in this video, basically we are going to be dissecting this analysis, and we are going to be looking out for what was spotted in the market and how this analysis came about. But before that, if you're here to subscribe to this channel, don't hesitate to click that red button, subscribe to the channel, turn on post notification bell for you not to miss out on every video regarding trade tips, trade tricks, trading analysis that will be shared with us on this channel. So without further ado, let's go straight into it. So first thing first, what are the things that we actually put together in achieving this analysis and in achieving this kind of down pull, bearish pull in the market? As you can see, we are on the trade, and basically profit are locked and profit are secured. As you can see stop loss are below her entry, and totally it's actually safe. It's actually a safe trade as it is. So first thing first, what do we look at in analyzing this market? And in any market you want to analyze, what should you look out for? So there are certain things we actually put together in analyzing this. We put together the market structure, highlighting out the higher highs, the higher lows, and the lower highs and the lower lows in the previous market movement, market behavior. And as well, we make use of a certain chart pattern which will be disclosed to us as we go on in this video. So ensure you watch to the very end, and at the same time we make use of a particular tool which we call the Fibonacci tools, and the particular level that was added to the Fibonacci tools that is not on the default Fibonacci we have on our MT5 trader. That as well will be disclosed to us as we go on in this very video, so ensure you watch to the very end. So let's start off with the market structure that we pull out, identifying the higher highs and identifying the higher lows, and at the same time identifying every low highs and lower low in the market, which is actually pointing out to the support and resistance of the market. So let's go straight to the previous behavior of the market. Basically, I'm talking about the previous movement in the market. So what am I talking about? I'm talking about basically this identifying the movement of the market. As we all know, the market move in a wavy form, So what do we do as the market move in this way is for us to identify some basic lower highs, lower lows, higher highs, higher lows, identify the higher lows, the higher highs, the higher lows, the higher highs, the higher lows regarding an uptrend movement. And as we have the market move in a downtrend form, you identify certain or lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This is what you're going to pinpoint out first before progressing and adopting another confirmation for your analysis or for your trade. So that's we're going to be doing right now with this pair. Now we're going to be doing that with our horizontal lines. As we have this uptrend, we have our higher lows being marked out. The reason why we're using this horizontal line is that once you plot horizontal line on your chart, you see stretch throughout the market, throughout the chart to the present action, price action, to the present price action movement. So now we've identified our higher highs, our higher lows. So you're going to mark out every point that you can spot from the market. You just have to mark out every point you can actually spot from the market, and this you do it patiently, no haste. Do this patiently, no haste, because as you have it, you have the movement already. You have this movement, this movement, this movement, this wavy movement. As you have it, so also you're going to mark it out. You're going to mark it out with your horizontal line, So after you've done this successfully, you've marked out your market structure, you've marked out the higher highs and the higher lows, you have marked out the lower highs, the lower lows. All you need to do is to go straight to the present market movement and see any alignment with what you've marked out regarding the price movement in the past. So once you get to the present market, so all you need to do is to look at the present price action and see how they actually react to this level. If you look at it, let's say as you marked out your levels, looking at this particular zone, see this zone, as you can see, you see when price actually got to this zone, you can see a big push that actually that the market actually did from that very zone. Let's say you've marked out your basic supply zones, basic demands, or basic higher highs, higher lows, and you have the opportunity to trade this market from here. You see the particular push you get from here, and waiting for another price getting into this zone, there's a tendency for the market to actually pull down, but the market actually did not get to that zone before making a push. So what next they will actually point out is that after the market trying to go back to this zone, it get to this particular level, they may make a U-turn. Next up is that we find out that the market is actually going back to this very point in which the market made a U-turn. Let me clear this so that we can see clearly what I'm talking about. So basically what I'm talking about is that as the market trying to push back to this zone, talking about this zone where we have a big push down, as the market trying to get to this zone which we are initially targeting to take our trade back to this very zone we have here, or to this very zone. As the market actually went back, as the market trying to push up, it did get to that point, it hit this level, and what happened? The market turned back. Now there's certain chart pattern that the market can actually do, which every trader know about, and this is actually common for the market to pull this out. That we are talking about M pattern, or what we call the double top pattern, where you have the market giving you a shape like M shape, or basically let me use an hand draw. Where you have the market having something like this, market push back, and the market getting back to this top, forming a double top. What next is to have our market pushing down. That is what we actually, after marking out our zone, that is what we actually anticipated. As we have it, we have the first top and we have the neck B form. The next top, the market gets here and we took the trade. The market now is falling, and right now we are on a safe trade, waiting for the market to break this neck of the double top. Not only that, we didn't actually base our entry or our analysis based on majorly identifying the market structure and at the same time the chart pattern, which is the hem chart pattern or double top chart pattern. This is the chart pattern I'm talking about being displayed for us to see what I'm talking about. We have series of chart patterns that the price can actually pull out in the market. In the next video, I'll be talking about all these chart patterns which the market actually usually plot out in the market, and which you can actually take advantage of that outside. So the last thing we actually put together in getting a concrete confirmation and giving us the confidence to go into this market, aside from the market structure at the higher highs, the higher lows, the supply and the demand zone, at the market chart pattern, which is the M for M pattern or the double top pattern. So the other two we actually adopted in solidifying our analysis is what we call the Fibonacci 2. So how do we go about this? First thing is that when you want to make use of your Fibonacci 2, you have to identify a particular peak in the market, a very strong peak in the market, which really happened. We have this and we have this. So these are the peak and trough, basically the peak and low that we make use of in plotting out our Fibonacci. And how do we go about that? What we need to do is just bring out our Fibonacci. So there's certain way you have to draw your Fibonacci to get accuracy in your analysis. This is very important for you to master. So knowing very well how to make use of Fibonacci tools, how to make use of Elliott wave, how to make use of Wolf waves. So I've organized a particular course which is very detailed and very easy to actually adopt in killing the market and making that your profit with basically a low fee. So to do that, the link to join the trading class is in the description. You can actually join the Telegram class and go through the information, then hit me up to have access to this. So what we did is that we actually mapped out our Fibonacci 2 from our peak to the low. Then thereafter, what do we do? So there are certain levels which are not in the default Fibonacci. These levels are very perfect, and they are actually 100% killer levels in making the market. These levels is what we actually plot on Fibonacci 2 to get this movement. This level will be shared with us as well in the class. So this level right now, I'm gonna be adding it to the Fibonacci, and we are gonna be seeing how accurately it gave us that particular spot we actually entered with zero drawdown. So let's add up the levels. As we have it, we see our level is being added, whereby we added the LVG and we added the LM. So basically this level are many to them. There's actually secretive strategy and certain way they can actually be adopted. As you can see it, we have it perfectly mounted for us, and we get the perfect level, the perfect entry that we actually aimed for, and we got it, and we have our market actually still moving, still going well. We have the target eating up, and we still have the market still running in profit. So basically these are what are actually adopted in making this market. You cannot just go into the market and say you want to trade the market without analyzing, dissecting the market very well before you can actually get something out of the market. So that's it, guys. I believe we've gained one or two from this analysis video, and if that's the case, do well to like the video, subscribe to the channel for more analysis videos, trading tips, trading tricks that will share with us on this channel. And if you wish to join the trading class, the link to join is in the description, and do well to go through the pin message and follow the necessary information, and you are good to go. So until next time, it's bye for now.